Look, pilots are leaving thousands of dollars on the table every single year simply because standard insurance companies, well, they just don't get how we fly. As your advisor, I want to welcome you to this explainer. We're going to completely demystify your aviation insurance portfolio and optimize your coverage from the ground up. You know, if you hold a pilot's license, you've probably felt that navigating insurance applications can honestly feel way more frustrating than shooting a precision instrument approach in heavy weather. You're dealing with generalists who literally don't know a Cessna from a Cirrus. But today, we're clearing that fog. I'm going to hand you the exact structured playbook that aviation consultants use to protect a pilot's hard-earned assets.
So here's the flight plan for our consultation today. First, decoding the underwriter's mind. Then, life insurance without penalties, protecting your pilot income, airplane hull, and liability. And finally, strategies to lower your premiums. Let's get right into it.
Right out of the gate, we've got to ask this absolutely critical question. Why on earth do highly trained pilots pay generic, high-risk insurance premiums? It is so incredibly frustrating. Think about it. You spend thousands of hours and tens of thousands of dollars perfecting your craft, right? You pass grueling check rides, you maintain super strict FAA medical clearances just to sit in that cockpit. Yet when you go to apply for a standard life or income policy, legacy insurance carriers will often just lump you into the exact same high-risk category as someone trying out some dangerous, uncertified weekend hobby. It's crazy. So we need to figure out exactly why this happens on the back end, and more importantly, how we can put a stop to it and protect your wealth.
Okay, Section 1, decoding the underwriter's mind, and specifically, how insurers actually assess aviation risk.
Here's the core truth of the matter. Modern specialized insurers know the odds of a fatal plane crash are roughly 11 million to 1. To put that in perspective, that means preferred, deeply discounted rates are absolutely on the table for you. But here's the insider insight you really need to grasp. Standard insurance underwriters, they don't look at it this way at all. General carriers are relying on these totally outdated blanket risk models. They literally just see the word pilot and instantly flag the application for rejection, or they slap on massive surcharges, all because they lack the specialized knowledge to evaluate your logbook. Aviation-specific insurers, on the other hand, actually look at the real statistics. They know you guys are highly educated, technically proficient, and closely monitored for health and safety. To the right underwriter, you aren't some high-risk gamble. You're actually a highly desirable, low-risk client that they desperately want on their books. Now, if you apply through a standard, generalized agency, you are almost guaranteed to run headfirst into this next issue. We've got to talk about the dreaded flat extra fee, because avoiding this specific surcharge is absolutely the fastest way to protect your wallet. Basically, a flat extra is just an arbitrary dollar amount added on top of your base premium for every $1,000 of coverage you buy. Let's put our financial consultant hats on for a second and look at the long-term pain here. Say you have a $5 flat extra on a $250,000 life policy. That isn't just a one-off $1,250 annual surcharge. If you hold that policy over a standard 20-year term, that is $25,000 literally flushed down the drain for absolutely no reason, simply because the underwriter didn't understand your flight profile. No way should you be paying that. To really drive this home, let's look at how the exact same flight hours can yield vastly different financial realities, depending purely on your certifications. This is pulled straight from actual underwriting guidelines. So, picture a private pilot flying between 26 and 150 hours a year, but they have their instrument rating. That pilot can easily secure preferred rates. But take that exact same pilot flying the exact same number of hours, but without an IFR rating, boom, they get hit with a standard rating plus a $3.50 flat extra. And student pilots, well, because of their unproven track record, they're almost always hit with that steep surcharge right out of the gate. The big takeaway here, your specific ratings, not just your total hours, directly dictate your financial exposure.
Moving right along to Section 2, life insurance without penalties, tailoring coverage to your flight profile.
So underwriters place you into these distinct risk categories, right? And the secret here is that we have to aggressively package your application to highlight the unique strengths of your specific group. For instance, if you're a commercial pilot, your highly regulated environment, those recurrent simulator checks, and strict standard operating procedures give you a massive edge for securing preferred rates. If you're a private pilot, underwriters are actually looking for a very specific sweet spot. Flying between 30 and 150 hours a year is kind of the golden ratio. It shows you fly enough to stay highly proficient, but not so much that your sheer exposure risk skyrockets. Military pilots, you guys are strictly judged by your assigned mission type. A utility pilot faces totally different metrics than an attack pilot. And if you're a student pilot, the advice is simple. Aggressively log those hours. You want to quickly get past that critical 600-hour mark where we can jump back in, renegotiate, and drop those temporary flat extras entirely.
Let me give you a real-world scenario straight from the advisor's desk to show you just how powerful this packaging really is. We had a healthy 38-year-old National Guard UH-60 Blackhawk pilot who was bluntly told by a standard life insurance agent that a $5 flat extra was absolutely the best rate he could possibly get. I mean, we're talking thousands of dollars in excess fees. But by taking his exact same flight profile, his identical logbook, and utilizing an independent aviation insurance specialist who actually understood rotary wing military risk, he secured multiple quotes with zero flat extras. He even locked in a top-tier preferred rate. It was a massive victory, and it proves a really vital rule. The agent you use to access the market matters just as much as the hours recorded in your logbook.
All right, let's pivot to Section 3, protecting your pilot income, safeguarding your livelihood.
There is a really dangerous, pervasive misconception floating around the aviation community regarding income protection, and we need to draw a sharp, urgent contrast here. Most pilots are familiar with standard loss of license insurance, but honestly, it's dangerously limited because it's merely a one-time capped lump sum. If you happen to suffer a long-term medical disqualification at age 40, that fixed pot of money will eventually run dry, and it's going to leave you financially stranded. True income protection, specifically negotiated with an own occupation definition, is your absolute secret weapon. This ensures that if you cannot fly as a pilot, even if you could, theoretically work a desk job, you still receive a steady, continuous monthly replacement income all the way to your retirement age. It's a permanent safety net, not just a temporary bandage.
Okay, Section 4, airplane hull and liability, ensuring the asset and your financial exposure.
Now, we really have to draw a hard, definitive line between protecting your physical asset and protecting your broader personal wealth. First, you've got your hull coverage, which is pretty straightforward. It's based on an agreed value you systematically set with the insurer for the actual flying machine itself. If the plane gets totaled, well, that's the check you get. But then you have your liability coverage, and this is what acts as the absolute firewall for your personal wealth. If you cause severe bodily injury to passengers or catastrophic third-party property damage, liability is the only thing standing between a tragic accident and your family's total financial ruin. Think about it. You can replace an airplane, but you definitely cannot easily replace a lifetime of accumulated wealth that gets completely wiped out by a lawsuit. Let's break down some real-world Wexford insurance scenarios to demonstrate exactly how your flight experience and the sheer complexity of your chosen aircraft intersect to dictate your final premium. Say we have a relatively new pilot with just 150 hours, flying a fairly simple $85,000 Cessna. They might pay around $2,500 to $4,000 a year. But watch how the math changes as you upgrade the hardware. An experienced, instrument-rated pilot stepping into a $450,000 Cirrus SR-22 is going to see premiums jump to between $6,000 and $9,500. Why? Because the underwriters are suddenly pricing in the high-performance transition, the expensive composite materials, and those hefty avionics replacement costs. And moving up to a multi-engine Piper Seneca pushes that premium past the $10,000 mark, mainly due to asymmetric thrust risks and dual-engine maintenance costs. Basically, underwriters are constantly weighing the replacement value and technical complexity of the machine directly against the depth of your in-cockpit experience.
Moving into our final section, Section 5, strategies to lower premiums, tactical optimizations for your portfolio. So, how do we actively bring these costs down? Here is your concrete consultant's action plan. Follow these 3 tactical steps to instantly make your risk profile absolutely irresistible to any aviation underwriter. First up, if you use tobacco, you really need to stop. Seriously, being smoke-free for just 12 months literally cuts your life insurance premiums in half. It is hands down the highest return on investment you can possibly make. Second, go get that instrument rating. Standard legacy carriers might completely ignore it, but specialized aviation underwriters know that weather is a massive factor in accidents. An IFR certification unequivocally proves you can handle complex airspace and unexpected IMC, and that can easily drop your rates by 10 to 15%. Third, just hangar your aircraft. Leaving your plane exposed to hail, violent windstorms, and ramp theft is a massive liability. Tucking it away indoors drastically reduces the insurer's exposure, giving us the perfect leverage to pass those hull savings directly back into your wallet. Let me share one more thing, the ultimate insider hack for lowering your aircraft premiums. Documented, recurrent proficiency training, like the FAA Wings program, is an absolute game changer. Insurance companies are sitting on mountains of actuarial data, proving that pilots who engage in regular documented training have significantly fewer accidents than those who just fly out for a $100 hamburger once a month. As your advisor, I use this as direct leverage. When you hand me proof of recent simulator training, advanced flight reviews, or completed wings phases, I can literally drop that onto the underwriter's desk to force your premium prices down. You see, you aren't just a pilot anymore. You're an active, documented risk manager, and let me tell you, insurers aggressively compete to insure active risk managers. I want to leave you with this final, absolutely crucial thought to make sure your hard-earned assets are truly secured. Ask yourself right now, does your current policy genuinely protect your family's financial future, or does it merely protect the insurance company's bottom line? If you just bought your policies off the shelf from a standard generic agent without any specific aviation focus, there is an incredibly high probability that you are severely overpaying while simultaneously leaving catastrophic gaps in your coverage. Stop settling for generic, penalized rates. Take absolute control of your logbook. Work with dedicated specialists who actually understand the difference between standard and preferred aviation risk, and make sure your entire portfolio works for you, not the underwriter. Thank you so much for joining me on this explainer. Stay sharp and safe flying out there.